What if I told you America's biggest threat right now isn't China's military, not even AI, and no, definitely not TikTok dancers. It's something way more boring. Bonds. Yeah, US Treasury bonds. The kind your grandpa brags about at Thanksgiving while you pretend to check the turkey but you're really just trying to escape that conversation. But here's the twist. Those boring old bonds, they're at the heart of a ticking time bomb that could blow up the entire global financial system. And yes, this time it's not just a Netflix plotline. China is dumping US debt like it's radioactive, Japan's not far behind, and Uncle Sam, he's still printing dollars like there's no tomorrow. We'll uncover why the US needs countries like China and Japan to buy its debt, what happens when they say no thanks, and why this might be the start of a new world order in global finance. Stay with us. You'll never look at a per-year Treasury note the same way again. Alright, let's talk about bonds. Not the James Bond type. We're talking Treasury bonds, the stuff that keeps Uncle Sam's lights on and wars funded. Here's the thing. Every time the US spends more than it earns, which is basically every year since you were born, it borrows money by issuing Treasury bonds. And who buys those IOUs? Pretty much everyone. Your bank, your pension fund, China, Japan, and probably your neighbor who still uses a fax machine. These bonds are the backbone of the global financial system. They're considered risk-free. They're the dollar-flavored Coca-Cola of finance, boring but addictive and always in stock. Why? Because they're stable, liquid, and as long as America pays her bills, they're basically the world's piggy bank. Now, here's where things get interesting. China and Japan, once the top two buyers of US debt, have started backing away slowly, like they're ghosting America on a second date. Japan's selling to defend its own currency. China, possibly using it as a bargaining chip in the geopolitical poker game. Less demand for US bonds means Uncle Sam has to find other buyers. Usually, that means the Federal Reserve steps in, and guess what? More money printing. It's like using your credit card to pay off another credit card. Eventually, something's going to snap. So what happens when the whole world starts saying no thanks to US bonds? Is the dollar still king or just an emperor with no clothes? Alright, real talk, who actually owns America? And no, we're not talking about your cousin who just bought Tesla stock and now thinks he's Warren Buffett. About a third of US government debt is owned by foreign investors, China, Japan, the UK. These folks didn't just come from McDonald's, they came to buy a slice of Uncle Sam's IOU. Think about it, every time Washington overspends, which is like every Tuesday, we patch the hole with more Treasury bonds. Foreign countries buy them up, which basically means America's running on borrowed faith, literally. China used to be our top lender, over $1.3 trillion in treasuries. Now they've dropped below $800 billion. That's not a tiny haircut, that's a buzz cut. Why? Because Beijing's not stupid. They're hedging their bets. This isn't just about finance, it's about leverage. Holding US debt gives you influence, a seat at the table without firing a shot. But if the ship starts to leak, you unload your cargo before it sinks. Meanwhile, Wall Street's still buying, because when you've got AI insider models and the Fed on speed dial, who needs caution? Let's be real, the US financial system runs on money, sure, but it's built on trust. And here's the kicker, that trust, well, a growing chunk of it is held by people you didn't elect, in countries you can't pronounce, with goals you don't know. Forget tanks and missiles. In 2025, the real power comes from owning debt, controlling interest rates, and riding the flow of capital. And if you don't know who owns America, maybe America isn't owned by you anymore. Alright, so picture this. China and Japan, the two biggest holders of US debt, are quietly heading for the exits. Not exactly a full-on sprint, but let's just say they're not RSVPing to Uncle Sam's debt party like they used to. According to the US Treasury, China's stash of Treasury bonds fell to $759 billion in 2024, the lowest since 2009. So why are the U.S. quote, S biggest creditors ghosting its IOUs? Reason number one, diversification, baby. China's playing the old, don't put all your eggs in the bald eagle's basket game. They're shifting reserves into things like gold because, apparently, shiny rocks are starting to feel safer than American promises. Reason number two, politics over profits, with US-China tensions hotter than a cayenne pepper. Beijing's trimming exposure, owning too much US debt while being in a trade war, that's like lending your ex money after the breakup. Reason three rate hikes equals bond blues. As the Fed keeps hiking interest rates like it's training for Everest, existing bonds with lower yields suddenly look like yesterday's news. So, foreign investors like Japan are selling older bonds and locking in better rates elsewhere. Here's the deal. When the world's two largest bondholders start easing out, it's not just a financial decision, it's a message. One that says, we're not so sure about the future of this whole US debt thing anymore. And if others follow, it's not just higher borrowing costs for America. It's bye-bye stability for the global financial Jenga tower. Alright, so let's step into some dangerous territory. What happens if China and Japan or anyone really decides to hit the sell button on all those US Treasury bonds they've been hoarding like limited edition sneakers? What do you think happens to the value of those bonds? Spoiler alert, it tanks. And when the value of bonds drops, interest rates rise, like a lot. And when interest rates rise, borrowing money becomes more expensive, slowing down everything from business investment to your next mortgage. And it's not just the US that gets hurt, oh no. Remember, China and Japan own a ton of those bonds. So if their holdings plummet in value, they're looking at some serious losses too. See the dilemma here? It's like a high-stakes poker game where no one can really fold because they're all holding hands that could break the whole table. But as we've seen, sometimes even the largest players in the game have to weigh the risks. And with all the geopolitical tension floating around, the question is, will China and Japan hold their cards, or will they bluff us all? Because at the end of the day, this isn't just about economics, it's about trust. And trust, my friends, is a fragile thing. The moment it starts to crumble, the entire house of cards could come crashing down. How long can we keep pretending everything's fine when the cracks are getting bigger? And that, my friends, is the global financial circus where America juggles debt, China sharpens its trade claws, Japan plays it cool, and the rest of us, well, we just hold our breath and hope the tent doesn't collapse. Markets rise, empires fall, and somewhere in between, you're just trying to figure out if now's a good time to refinance your mortgage or invest in gold, or just stock up on instant noodles. But here's the real kicker. The economy isn't just about numbers, charts, or even debt ceilings, it's about trust. And once that's gone, well, even the strongest currency can't buy it back. Now tell me this, if the global economy is a house of cards, who's holding their breath, and who's already walking away from the table?